Welcome to this week's Cattle Call. I'm Susan Littlefield on the Rural Radio Network. Well, you can't smell the roses forever. Sometimes you got to bring the manure spreader in and deal with the market. Is that a good enough pun? We'll find out as we talk about what's happening in this market today. Of course, we had a WASDE numbers as we record this on a Wednesday. We have a key reversal going on in this August. We're going to talk about the collapse of the dollar. Is that influencing what we see in this trade as well? Lots going on in this cattle market, which went from green to red pretty darn quick. Brad Kooima is joining us. He's with Kooima Kooima Varilek out of Sioux Center, Iowa. So would that be a good enough description for you, Brad, with a market that kind of turned themselves negative pretty quick?
Boy, you said that right, Susan. Thanks for having me on. Most of the times it's super enjoyable. Not that it's your fault. As we said off air here, our timing is interesting today. But you know what? Hey, it's not the first time that I've gone through something like this, or anybody else has fed cattle through. And there's a lot of commodity broker little sayings. I think of the high speed wobbles, the market tops the day, the news is the best. Cure for high prices is high prices, whatever. Markets are, and I don't care if you're talking about corn, copper, cattle, markets do have certain nuances and what happens, especially I believe with livestock, maybe more so than grains, where they just go screaming higher, almost like a pop bottle rocket until they don't. Okay. I know that sounds trite, but we had taken all this discount out of the market. The South hasn't traded. Nobody has traded. Last trade in Kansas was 178. So we actually had premium. Well, we haven't been premium cash for a long time. I thought that there was, if you look at, for instance, like I was all day today, off and on in between trying to trade futures, what was going on with the Superior Video, for instance, or what was going on at particular big sale barns today. It is amazing how much money, how much enthusiasm, how much, they got a different calculator than I have, Susan, for what some of these feeder cattle are bringing. And so you almost wonder where you go, like, geez, is that, it seems like there's some irony in that's the day the market finally tops. Nature of the beast, you get really overbought. And if you think about it, if you're a cattleman, and I am, so I'm a potential seller every morning. Anybody's got cattle in his yard is a potential seller, right? Because he's long inventory. Then you get action like this, and you go like, "Holy cow! I don't have any hedges on. Maybe I better get some on." And it creates that very kind of atmosphere that gives you that toppy action like today. And I think that's what we did. We probably put a short-term top in here for a little while.
So a short-term top for a little bit, an overbought type of market feel. What's the next step?
Well, if the reversal is real, first thing, when I cut my teeth on this stuff 45 years ago, this was the three things for a reversal. From a terminal area, which is just a fancy way of saying an important area. Well, all-time highs, I'd say that's pretty important. Has to be done on heavy volume, which we had huge volume today, by the way. Third thing we find out tomorrow, and that is whether you have follow through. So if you have follow through to the downside tomorrow, I think then you're going to start to figure out retracements. And, I figured you might ask me this, but I would say somewhere around 172 level on the August cattle would be a first spot to look at. Someplace just a little bit 176 basis the October cattle to look at for a place to hold. I pulled out the 2014 charts. I've looked at them so many times, one would think I'd have them memorized, but I can tell you that market had an $8 correction in the summer and then went on to make all-time highs after that. So I don't want anybody to think that all of a sudden Brad's flipped, the highs are in, we're never going higher. That's not how I feel at all. I think the market almost needs some action like this to get some sensibility back into it. And I still think there's some great fundamentals to come down the road. So I'm still being inclined to buy breaks or think that breaks will be supported pretty well. So
obviously wanting to reel it in a little bit, get a better handle as we move into the latter half of July and into August.
You and I have talked for 2 weeks about the seasonality of, what are the odds that we can just pound this thing higher in July and August? Well, it did to a degree with a big correction in 14, but that's the exception. The North is going to have more cattle in August than they did in July. Now, I think we're pulled forward. I think we're very, very current. I know we are, but still there's more supply, right? And as a rule, you switch away from the high end ribeye New York strip type feature to the hamburger hot dog stuff that is normally summer vacations, blah blah blah. So yeah, and we're going to talk about what's the Fed going to do again with the interest rates, and we'll worry about the economy. Although, P.S. the S&P, the stock market made new highs today, so I don't know if this bearish talk about what's wrong with the economy doesn't really, that dog doesn't hunt very well here with me anyway. But I don't know. I just think we got awfully high and awfully overbought, so we get days like this. I don't think it's any reason to panic.
Doom and gloom. What are you hearing from movement in the South on these cattle, even movement up here in the North?
Almost nothing so far this week. I think the packer bought a few more cattle last week, so maybe he's got just the ability to be a little more standoffish, but it's only Wednesday. I would have been able to get an hour and a half ago steady bids here on cattle up in the North. I think though that steady at this point after the big plow hire we had, yeah, I don't know. I don't know if the market would be satisfied with that. I think when we started to rally, I think everybody assumed, well, it looks like cash is going to be higher again. The packer margins are not important to me, but I would say that it is still part of the market. And with beef losing a little ground, that may back off their incentive a little bit as well.
What are you looking for when it comes to, and you talked about what was going on with Wall Street and all that information on a Wednesday, but what are you looking for when it comes to consumer demand weighing in on this trade?
Great question. Going to get a C plus answer, I suppose.
Okay.
One of the fascinating things about trading cattle futures to me is that it's so much different than corn. Okay, so we just went through this whole series of numbers again, and why we have these reports at 11 o'clock is totally baloney. Right. You got this much crop, this many acres, it's going to yield this much, and we're going to use this much for feed, and we're going to use this much for residual or exports. We're going to make ethanol out of so much, and it's math. We're going to store it and do this. Cattle don't work that way. Okay. What demand is, and the government plays around with all those corn numbers on demand. What demand is to me is how much meat can you sell, how high? We have sold a ton of meat, higher arguably than maybe we've ever done before for a consistent period. I struggle with the idea that there's anything wrong with demand. I think demand at this point remains outstanding, both globally and domestically. Now, can things go wrong with that? Of course. Ask the hog guys. They were sailing along with huge supply, but demand was perfect. And then when that got a little funky there, COVID, China, blah, blah, blah. Mm-hmm. Yeah, things changed a bunch, so there's some risk here that you can maintain that kind of, high powered pace. I really think that the domestic demand thing is okay because of what I see, the shift that happened during COVID, where we learned how to cook our own steak, and we're doing that twice a week instead of spending the money uptown. So I think the demand part's all right. We just need a correction here.
Lots of great stuff today, and I know it'll be an interesting as we finish out the market week and head into next. Best way, somebody wants to have a conversation with you, Brad, and your cattle knowledge. How do they do it?
Fasten your seatbelt, right?
Yep.
I think let's go to our website, kkvtrading.com. That's as good as anything. You can sure call us 712-722-0023.
Wonderful. Thanks so much, Brad, for joining us this week. As we always remind you, commodity futures and options do involve a substantial risk of loss not suitable to all investors. And that's been this week's Cattle Call on the Rural Radio Network.